Alright, so Bitcoin has started to have a retracement, and just like me, I'm sure you want to know if it's going to continue or if the bull run has actually begun and if we're going to be headed up from here. In my last video, I was talking about a possible rising wedge here, which is a bearish indicator with a price target at the bottom of the wedge, which would bring us down to the 50% Fibonacci retracement level from this recent pump that we've been seeing since the beginning of the year. Also, we had this bearish divergence up here, and it looks like we also had a rounding top that was forming. And now all of these patterns are starting to play out, and we have started to see a retracement. But so far, we've only made it down about 8.5% at the worst. It is possible that we'll find some support right here and continue to the upside. But as I was saying, I think it would be a lot more healthy if we actually do come back down to about this 50% retracement level right here, because that would be about a 20-something percent retracement. And as I keep saying over and over again, these are really actually very healthy in the middle of a bull market. And it would send us down to find a good level of support, which could act as a launching pad, sending us for another leg to the upside. This would actually only be about a 15% dip, and I wouldn't be surprised if we do head a little bit lower than that even. As you can see, this MACD is starting to curve to the downside, and the blue line is crossing to the downside under the orange line right now, which usually means that we have some further downside to go. And if we do come back down to this 50% retracement level, filling out this possible rising wedge, then I think that would bring the daily RSI into the oversold territory, and we could probably continue to the upside as long as we actually make a higher low here, which will be pretty hard not to do unless we dip all the way down below about $20,000. Finally, if we do come back down to that level, then it looks like that's exactly where the 50-day moving average is, and usually during the beginning of a new bull market, we're going to come back down to turn that into support before we ultimately do continue to the upside some more. It looks like the actual catalyst that has been seeing us have this retracement is that the CFTC is starting to sue Binance, or at least their CEO, Shangpeng Zhao, over the willful evasion of U.S. laws unregistered crypto derivatives products. This article by CoinDesk says that the CFTC alleged Binance offered unregistered crypto derivatives products and directed U.S. consumers to evade compliance controls through the use of VPNs. As I've said in the past, I don't think that anything like this is probably going to send crypto down for another leg lower, at least not in this bear market, because there needs to be something that's actually striking more fear into the market than the FTX collapse for us to capitulate for a lower low, and I just don't see that happening, especially because, and this is the big thing, this is going to take several years to play out. The CFTC announcing that they're suing Binance really is nothing, because as you may have learned from the XRP or Ripple case, it takes a long time for our government to get anything done, and with them just now announcing that they're going to be suing Binance, it's going to probably be at least another 2 or 3 years before anything actually comes of this. Also, Binance doesn't technically even operate in the US, and they're a global business, meaning that this is just going to push innovation offshore, and they're going to continue operating in different countries while trying to evade US jurisdictions probably. It would probably mean that Binance US is going to stop being able to operate here in the States. But this is just another reason why I keep saying that you should keep your cryptocurrency on a cold storage wallet, because centralized exchanges are basically the same thing that cryptocurrency was invented to avoid, which is a centralized entity being in control of your money, and if they collapse, then you collapse basically. So while it is necessary to have these centralized exchanges at the moment so that we can have fiat on-ramps, it's definitely not a great place to keep your cryptocurrency, because if there is some bad news like this, or suddenly the government makes it impossible for you to withdraw your funds, then you're basically going to be screwed, and you're going to wish that you had your cryptocurrency on a cold storage wallet the whole time. Also, allegedly, they might have been misusing customers' funds, and they were probably manipulating the market because they could see where people's stop losses and all of the trades were actually sitting at, and they could get ahead of those trades, making billions of dollars for themselves off of the data that you have given them, basically. Just like a bank, if you have your cryptocurrency deposited with a centralized exchange, they can just lend your funds out or gamble with them and make all kinds of money and keep it for themselves while you just take all of the risk. But at this point, I feel like everybody in cryptocurrency who hasn't capitulated should have already learned this lesson, and if you haven't, then I guess maybe it's just your own fault. Right now, a bunch of people are saying that it's going to be really bad, but this is just speculation, because in the long run, eventually, probably Binance is going to settle with the CFTC, and they'll end up just getting a slap on the wrist, or if it's not, then we're going to probably see it coming, and there's going to be opportunities for people to get all of their funds off of Binance before its slow and eventual collapse. As I was saying, whenever FTX was collapsing, it seemed like Binance was the hero of that situation, but there was definitely some shady things going on with them, and it might not have been the best idea to trust your funds with them, because there is a reason why they haven't been able to operate in the US with the actual Binance exchange, and they've had to have the Binance US exchange up until this point. Also, Binance has supposedly a bunch of empty offices around the world that are just there as a shell, and there's not anybody actually operating with them. And this is just the things that we know about and the things that I can think of off of the top of my head. There's definitely a bunch of shady things going on, and that's just what happens whenever a bunch of money is available for people to manage. It's just human nature, and this is the same thing that we've seen happen with the traditional finance system. I'm not surprised that sketchy things have been going on with Binance, and I don't think that it's going to stop. Even if there is some solid regulation, it just might convince people that things aren't going on behind the scenes whenever they really are. But as I've said, cryptocurrency was created so that we could all escape that system and not just rebuild it. So just think about where you put your money, and don't be shocked the next time a centralized exchange has rumors of them possibly mismanaging funds. If you keep these things in mind, it's going to probably save you a lot of panic in the future. A lot of people think that these actions by regulators are part of the supposed Choke Point 2.0 operation that's supposed to cut off traditional banking systems from the crypto sector, making it pretty much impossible for people to have an on-ramp or off-ramp for fiat currencies. And while I'm not really sure that there's enough competency within our government to put something like that together, it definitely does seem suspicious, but I can't really put my finger on whether this is a conspiracy theory or not. What I do know, though, is that, like I keep saying in all of my videos, the government is not going to quit spending a bunch of our money. And it's definitely not for certain that Bitcoin is going to save us, but I know that the traditional finance system isn't going to be lasting too much longer. So while Bitcoin might not be able to save us and it might actually fail, the traditional finance system is going to fail, so you're pretty much left with the option of maybe being screwed or definitely being screwed. So what are you going to pick?
The President's proposed budget is $6.9 trillion. That's up from $6.4 trillion. The President has been running all over hell and half of Georgia saying my proposed budget decreases the deficit by $3 trillion. You probably heard him say that. I heard him say it the day before yesterday. My proposed budget will cut debt by $3 trillion. You know what I learned today about the President's proposed budget? Under his proposed budget, gross debt, that's all of America's debt, not just debt held by the public, but gross debt, all of our debt will rise under President Biden's budget from $32.7 trillion at the close of this year to $51 trillion by 2033.
The government and the Biden administration continue to lie to us and say that they're going to reduce the deficit. With the deficit going up to $50 trillion and the interest rate being at about 5%, that means that we'll have about $10 trillion in interest to pay on that debt every year. The GDP for the whole United States for 2021 was $23 trillion, meaning that almost half of our GDP will be going to pay just the interest on our national debt. The Fed cannot continue to raise interest rates because even if we stop spending money right now, there's no way that we're going to be able to service our debt, and eventually we are going to have to default or just continue printing money. Already, these high interest rates are starting to have a detrimental impact on our economy, as nearly $100 billion in deposits have been pulled from banks in the midst of fears of a total global banking crisis and collapse. And the government says that people need to hedge their interest rate risk so that they don't lose money, but hedge funds are actually losing with steep losses as well. This article by Yahoo Finance says that last year, multi-strategy firms raised $6 billion even as the industry suffered from $112 billion of outflows. The trend has largely continued in 2023. A lot of people are seeing their money disappear, and while a lot of us probably don't care about these hedge funds going down, it can have ripple effects across the economy with a bunch of people panicking and trying to find other places to put their money. And to bail out the banks and try to stave off more of an escalating crisis, the Fed has increased their balance sheet by another $90-something billion, with a total increase of almost $400 billion in the past couple of weeks. This has erased all of the progress that they've done rolling off their balance sheet since about October. All the while, the government is saying that they're not doing quantitative easing and that we're not all going to bear the brunt of these so-called not bank bailouts. All of this money comes from somewhere, and where it's really coming from is that tax without representation that is inflation. And this at a time whenever customers say losing supplemental income would ruin their finances, because 62% of United States customers live paycheck to paycheck in February of 2023, and 20% of those people living paycheck to paycheck are actually having troubles trying to struggle and pay their bills. And the only reason that this many people are able to pay their bills is because 29% of consumers overall are supplementing their incomes with side hustles like driving for Uber or something like that. This explains why non-farm payrolls have been on an incline while the economy has been on a decline. People are needing to get multiple jobs just to make ends meet. And as the Fed continues to say, the interest rates that they've done up until this point work with long and variable lags. So if all of this damage is starting to happen to the economy now and the Fed continues to raise interest rates, then we're going to see those interest rates working their way through the economy, slamming into all of us and making this whole banking crisis and the economic and global crisis a lot worse in the future. For this reason, I think that the Fed is going to have to do a pause and possibly even do some rate cuts coming up in the next 1 or 2 meetings. And as the economy continues to plunge into a recession, people are going to look for more alternative investments that aren't being damaged by earnings. And as I've said multiple, probably endless times in the past, Bitcoin and cryptocurrency don't have earnings, and I think it's going to be a viable investment in a time when there's not many other viable investments, and basically a replacement and a digital gold in a time when gold prices are manipulated to such a degree that they might not actually be a viable safe haven. And now it looks like my prophecy is starting to come true.
All right, well, let's expand on our conversation about the investor search for a safe haven. As fears over a banking crisis de-escalate, investors are taking a second look at hedges like treasuries and even riskier assets like crypto. Well, with more on this, we have Alexandra Canal joining us at the moment. So, Ali, talk about some of these safe havens.
So, as you were just discussing, those traditional safe haven asset classes are largely considered gold, the dollar, treasury yields, and those are typically areas that investors flock to during uncertain economic times. And certainly after the collapse of Silicon Valley Bank, there were a lot of concerns over contagion and a full-blown banking crisis. Amid these risks in the banking sector, investors have been looking elsewhere. Tale as old as time when it comes to the banks going down, crypto going up. Bitcoin is up more than 15% over the past month. And about 2 weeks ago, in the immediate aftermath of this bank turbulence, Bitcoin hit a 9-month high. I do think that as investors continue to digest what's going on in the economy, continue to access all this economic data, and even what's going on with this banking crisis, there's going to be this risk on versus risk off sort of trade in the future. And the definition of what a safe haven actually is going to keep evolving and changing.
I mean, clearly, because at the beginning, crypto was like, no, that can't be a safe haven. Then it was, then it wasn't. A lot to keep up with. Thank you for breaking that down for us. Alexandra Canal there for us.
This is Ibisu. He's named after one of the 7 lucky gods of Japan. According to legend, he will bring wealth and prosperity to anybody who evokes his name. So don't forget to write his name in the comments or you'll bring dishonor to your whole portfolio. And check out this video right here. Say goodbye, Ibisu.